Dollar rises as global stocks fall, inflation and tariffs explained. Global markets hit a nerve this week as the dollar surged while global equities dipped, a risky dance between mega-cap optimism and inflationary fears. Here's the breakdown you must understand. The divide, dollar strength versus stock strain. While the US dollar index logged steady gains, plus 0.26% at 100.05, pushing towards its first monthly advance in 2025, MSCI's global equities gauge slid 0.57% to 929.02, a stark contrast to June's tech-fueled rally. Why the split? Let's unpack this. 1. The tariff tangle. Mexico's reprieve, others face fire. President Trump's 90-day tariff pause for Mexico, triggering the peso's 0.23% rise, didn't calm broader tensions. Most countries braced for higher duties, especially South Korea, now facing a 15% tariff unless it invests $350 billion in US projects. The yen slumped 0.84% versus China. The dollar after the Bank of Japan admitted inflation will outpace forecasts. 2. Inflation versus earnings, a battleground. It's harder than expected US inflation, tariffs boosting import costs, clashed with mixed earnings reports. Tech giants like Meta, plus AI ad sales, and Microsoft plus $30 billion AI investment briefly lifted markets, but small-cap indexes like the Russell 2000, negative 93%, and SP 600, negative 1.17%, tanked. Proof higher prices disproportionately strain smaller firms. 3. Fed frustration, market indigestion. The Fed's dash to cut momentum collapsed Wednesday, yet Chair Powell still insists on patience for rate decisions. Trump's criticism of the Fed reignited, but investors are stuck. It's one of those weeks where data overload leads to paralysis, warned Kevin Gordon, Schwab. Key data dissected: jobs, wages. Fewer unemployment claims met higher Q2 labor costs, plus wage growth. Bond yields. 10-year yields dipped to 4.372%, but the 2-year edged up to 3.957%, signaling mixed Fed rate bets. Oil, gold. Crude slid 1%, 69.26 barrel, amid stockpile shocks, while safe haven gold rose to $3,291.55. But here's the kicker: tech megacaps dominance. Nasdaq plus 3.7% for July, masks deeper market fragility. Europe's stock 600, minus 0.75%, fell to weekly lows as auto-beverage sectors face 15% US tariffs. US small caps? Their July gains are a mirage. Breadth is weak, and large caps alone can't carry the market forever. Controversy alert. Is the Fed's hawkish hold logical given pinched small businesses and spiking import costs? Trump's tariff strategy, while bargaining leverage, risks pricing US goods out of global markets. Debate time. Should central banks prioritize inflation or growth? Final thought. As August 1's tariffs and jobs report loom,